Hello and welcome back to Weekly Market Recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market fall 2.2%, one of the worst weeks we've seen all year. And it was even a short week. So we had one of the worst pullbacks we've seen all year on a short week. But the big news moving the market, we had Powell be reappointed or renominated by Biden. We also had actually some really strong economic data, but then on Friday, we had a lot of very worrisome coronavirus data come out of South Africa, which led to a big sell-off on Friday and really the full experience of the loss in the S&P 500 of the 2.2% was really all felt on Friday, which we'll see. So if we jump into the market, we actually see we started off the week relatively strong, starting to try and test past highs that we've seen in the market. Then we started to see a little bit of volatility. Actually, one of the surprising things is when Biden came out and renominated him, the market fell, which I was expecting with the clarity around Biden's appointment that we were actually going to see the market enjoy that fact. But I think there is some fear that Powell might actually still be a little bit too dovish and inflation could run away. And we saw this pain in the market. We were obviously closed for Thursday, so that doesn't show up on this graph. And then Friday, as we were talking about, just a really steep sell-off. Most of it, as we experienced it, was right at the beginning of the day. And then there's a little bit of volatility. We did fall down to some lows midday, started to recover, and then fell into the close. And it was, again, a short week and a short Friday. I believe the market closed at 1 p.m.
And a very light volume.
Yeah, so Rich, explain why that matters, that it was a light volume.
Well, the less volume you have, the more likely it is that you're going to have much more volatility, both on the upside and the downside. So today, where we had a lot of selling, it gets exaggerated. We've seen this many times on just before holidays when there's some bad news that comes out. And basically with the coronavirus and this new variant that nobody quite knows just how bad it will be, but it has 30 mutations, and that's considered something to watch. Right now, they're trying to figure out whether this is a concerning issue or not, and we'll probably have about 2 weeks. But in the meantime, the United States, Great Britain, and the EU, as well as some Asian countries, have closed their borders to people coming from South Africa, where the virus mutation was first located, as well as its neighboring countries.
So the reason why this virus strain is so worrisome, because we've seen tons of virus strains, obviously, since the original experience over a year ago. We had Beta, Delta, Mu. This one, they're starting to potentially call it Nu and U. But the reason why this one is so worrisome is most of the mutations that are experienced are actually in the protein that is being targeted by the Pfizer and Moderna and the different vaccines. They all target one protein for the antibodies to start to recreate themselves. This new strain, which is coming out of South Africa, actually has the most mutations in that one protein. So the fear is that all the vaccines that we had, what is the efficacy going to be if that protein has been changed significantly due to this mutation of the virus? Now, one of the interesting things about why are there so many mutations that are coming out of South Africa, it's because all of these ones, the beta that was found earlier and all the new ones, Mu and Nu, have all come from people who are HIV or AIDS positive in South Africa. And what happens is when someone has that autoimmune disease, it's almost a cesspool for mutations for viruses. And so that's why with South Africa, which is one of the highest concentrations of people with HIV or positive, we're seeing all of these mutations coming out. And then as soon as they start to come into the rest of the world, we see some significant differences in the COVID variant.
In addition, there are very few South Africans who have been vaccinated. So you have as many people with compromised immune systems In addition, you have very few who are vaccinated, and that is a formula for virus mutation, just as Knight has said.
So on the flip side, and this is kind of the shame, is earlier this week, we were getting such positive economic data. So we had the lowest initial jobless claims since 1969. Let's just let that sit for a second. It's almost been 50 years since, more than 50 years, since we've seen that low of data, which means we're really starting to see more full employment, people getting back to work. The other big surprising was consumer spending. So now that we've had all the stimulus runoff, we're not getting any more of that. The expectation was, okay, people are going to really stop spending and we're going to see pain in the market, in these companies. No, we saw the opposite. We were over 1% for the month. It was, I believe, 1.4% for the month of October. That's an incredibly high number for month over month growth in consumer spending. And again, not even really in the holiday season yet. To see those type of numbers, great for companies. It means that the economy is working really well. Now, there are some questions about, again, with wage growth and everything like that, would that just be feeding the inflation fears? But overall, that was really positive data showing that the economy was doing well. Now, on the flip side, with this coronavirus data, it just brings into all the supply chain shortages that we've had. Are we going to have to shut down trade routes again? Are we going to have to shut down different gathering areas? That's the biggest fear right now in the market, which all this positive trajectory that we had in the economy can be stopped very quickly by a resurgence of a new variant in which we don't have efficacious vaccines against.
And right now, we don't know whether that's true or not, whether they're efficacious or whether the virus will be more contagious or deadlier than the Delta virus. What we do know is that in Pretoria, South Africa, they're having a big surge of this particular variant. And since the Delta virus was very strong there too, there's this fear that the new variant is overtaking Delta. And that would be very worrisome.
And we know a couple other pieces of data, like the 2 confirmed cases in China, they were both previously vaccinated. So there's, again, this fear that, okay, maybe it's more breakthrough than Delta or others, but we don't have enough data, but the market doesn't really care about the overall data. The market reacts immediately. So we saw a large sell-off because there's fear of this could be a very real possibility for future shutdowns. Everything that we've been experiencing, all the negative sides of the coronavirus for the past 2 years, all of that can just be recreating the wheel if in the worst case scenario, which the market is trying to price in immediately. But overall, I think the message is there's a lot of uncertainty at this moment, but it could go either way. We could see a lot worse news come out, and then we would probably expect the market to continue feeling some pain. We could see some really positive news come out and that we are efficacious. This isn't as big of an issue. And then I could see the market testing all-time highs, shooting back up and really ignoring what happened today. The unfortunate part is we just don't know the right news at this point, and neither does the market.
And this is a great point that Knight's bringing up, because as we've said on many occasions, the market hates uncertainty. And that's what's been presented, is uncertainty. And we see that with a big drop in the S&P 500.
The last thing to leave you with is that we didn't see a straight hit along all indices. We did see the Dow get hit the hardest, and actually tech, the NASDAQ, was hit the least hard, which again makes sense. If we're afraid of going back into lockdown and everything like that, tech was the more defensive sector. Strange, because that's not usually seen as a defensive sector, but during the last pandemic, that was. So again, we feel strongly with where your portfolios are right now and how they're positioned to weather this, either on both ends, if we continue to see worse news or if we do see a reversal and more positive news. Either way, we appreciate you guys tuning in. We're here to support you. Your money's here to support you. And we'll see you again next week.